Hello and good afternoon, real estate professionals. Thanks for being here for our June Agent Advantage webinar. These are brought to you by the Guaranteed Rate Companies. My name is Kurt Klaus. I hope everyone is doing well today. Again, thanks to agents here who join our webinars each month. A special welcome to those of you joining us for the first time. We have a big group today. We love it. The monthly webinar series that we do here at Agent Advantage, we cover topics and feature different guest speakers, all to help you, the real estate agent, improve your business. And we do these live. So along with taking notes, please ask your questions in the chat feature of the GoToWebinar. We'll bake time into the end of today's webinar to answer your questions. Today's topic is Mortgage 101, how to improve your knowledge and expertise of loan products and how to help you be a better agent for your clients. So the goal today in this webinar is we'll explain the unique benefits of all the different loan products, the importance of getting your clients pre-approved, along with everything you need to know to help set your buyers up for success. Again, we do these live. Please ask your questions in that question feature on GoTo. The webinar series, again, this is part of and archived on our Agent Advantage website. It's proprietary to the Guaranteed Rate Companies. Agent Advantage is no cost. It's our site where we offer marketing tools and technology and content and coaching to make you the agent, your life easier, to help you look good, help your clients. And we built it for agents across the country like you, trust us to close loans quickly and help grow their business. If you don't have an account, you can go to agents.rate.com to access Agent Advantage. We also have a version of Agent Advantage for all three of our companies. So if you're working with Guaranteed Rate Affinity, that web address is agents.grarate.com, and the Proper Rate group is agents.properrate.com. Again, all the past webinars are archived on Agent Advantage. There's a coaching tab there. We've got a whole top agent video series. So again, no cost videos and webinars and short interviews that you can go in and check out as you like. We are also excited to announce that we just rolled out our new private Agent Advantage Insider group. Rolled this out last month. We created this to help you, the agent, stay informed on industry news, and it has content on there, and it's all about promoting agent excellence. So I think Danielle has added a link to go to the Agent Advantage Facebook page in the chat if you want to click that, if you're not part of this and you would like to be part of it. Or we put a QR code. QR codes are back thanks to the past year and the touchless menus. You can scan that QR code right on your screen on the PowerPoint if you want to be a part of the closed insider forum that we have, that is Agent Advantage Insider. We love the two-way communication, gathering feedback on you and what else we can provide for future webinars. We just did one on how to create a Google My Business page and how to make a video tour with your phone. So we're listening to you, and there's great content on there. Again, if you'd like to be a part of the Agent Advantage Insider Facebook page, you can request to join, and we would love to have you. So let's get to it. Again, take notes. Give us your questions. We'll get to those at the end. Speaking of promoting excellence as an agent, the purpose of today's webinar, we want to improve your knowledge of loan products, help you and your clients succeed. And our guest speaker today, there is no one better, more thorough or experienced to cover today's wide range of different mortgage products. Our own expert, he is our Senior VP of Sales here at Guaranteed Rate. Hello and welcome, Dave Lopshire.
Hey, Kurt, thanks. Appreciate I really love having the opportunity to talk a little bit about mortgage with everybody. It's really kind of a fun topic, and we're not trying to turn you guys into mortgage loan officers. What we're trying to do is just position you to you can have a really good conversation as you prepare your borrowers, your buyers, to get them ready. We call them borrowers, you call them buyers. We try to get them in a position to so you can sell them a home, right? So that's what we're going to talk about today. So you can be kind of the answer person to steer them in the right direction when it comes to seeking out getting information about mortgages. So we'll kind of go through this today. Yeah, we'll go through this today, and you know, I'll echo what Kurt said. If you have a question, now I can't get really specific about a particular buyer's situation. I can't really be the clarification desk for individual loan situations, because I'll remember and just remind you that every buyer you have is different. Every buyer you come in contact has something in their profile, something in their history that sets them apart, and that's what we do, right? We identify those things. We try to figure out how we get them into the right mortgage program that helps with their long and short-term financial goals, and in getting them in position to buy a home. So I think it's just one thing that I want to remind you of is that every situation is different. So we can't really get a whole lot into specifics. As we think about also this crazy world, if you go to the next slide there, Kurt, this crazy purchase market where a lot of you are experiencing multiple offers on every property. We got low inventories. I'm having a lot of people saying that they're having some audio issues. So just trying to make sure that everybody can hear. A few of you, just one or two people, just type in the questions box that you can hear us okay. Just give us a yes or no. Okay,
Yeah,
good.
I think we're good. Great.
Yep, perfect. All right. And we can't really tell them, but we're gonna let people know that can't hear us that they can probably dial in and they can hear okay. All right. And I'm glad you guys all found the questions box too. Perfect. All right. So as we go back to this crazy market that most of us are dealing with, right? Kurt, it's amazing. I've seen so many multiple offers on so many different homes that are for sale. I was, experienced one where the people offered way over what the product, the home was even, on the market for, and still didn't get the offer. So what we want to do is we want to make sure that we help you position your buyers to be in the best position to be selected as the offer that goes through. So, and again, I work at Guaranteed Rate, right? So I want to come at this, and I know you probably have a partnership with a lender. That's really important, that you have a partnership with a good lender who can provide you with a pre-approval to get your borrower in a great position. We have amazing technology here at Guaranteed Rate. Hopefully your lender does as well. We make the pre-approval process really simple. We make it easy for your buyers to go through the process. I've actually had a buyer call me and go on to our website, fill out the system to get pre-approved, and within 20 minutes, I'm sending the pre-approved buyer back to the agent. So we want to make sure that you have that capability. It's really, really important that your buyers pre-approved and they're set up and ready to go for when they're going out there and making those offers. And I'm going to continue to drive that home as we go throughout this entire time that we have together today. So a pre-approval is really, really important. So when we think about buyers, right, there's a lot of buyers out there who don't believe that they're in a position to buy a home. There's a lot of those, especially first-time home buyers, especially younger buyers, right? They don't believe that they're in a financial position to buy a home, and they continue to rent when they could be really bettering their financial position in the world by, as we all know, purchasing a home. So what we do is we try to prepare the buyers for what they need to do. Obviously, we need to know how much they can afford on a monthly basis as far as a payment goes. We need to know how much money that they have, to be able to put down as a down payment, also cover their closing costs and their escrow charges. taxes, things like that. We have to see what, their situation is. We also need to understand where they are credit wise, right? Because we all know that, based on their credit history or credit profile, that's going to make a lot of the determination of what they're going to be able to do, right? So we want to make sure that we school them and get them prepared to be in a financial position to buy a home. And if you factor in the amount of money that they want to spend on a monthly basis, their total payment, right, based on that payment and the current going rate and how much money that they want to put down that they can use for down payment, then that's going to determine how much home that they can afford. And obviously, you don't want to put somebody in your car and go show them a house unless you know that they're, ready to buy that house. So that's what we want to do, is we want to get them in prepared for that. Now, some of the things that we're going to go through today, there's a lot of nuances to these different programs that we won't be able to really do a complete deep dive on, but we're going to share as much information as we can about each and every one of these programs. So the 5 common mortgage types, and I'm sure you guys have all been exposed to this, but the most common is the conventional mortgages, right? Those are the Fannie and Freddie, the GSEs. These are a bulk of the mortgages that are out there. These are your borrowers that have credit scores anywhere from mid 600s to above that. They have anywhere from 20% to 5% to put down, sometimes as low as 3%. And it could be used for all kinds of different buying, whether they're buying their primary residence, whether they want to buy a second home, vacation home, as some refer to it, or maybe they just want to purchase an investment property, right? And there's some limitations on the number of investment properties that they can own, but this is the most common mortgage that we see are the conventional Fannie and Freddies, right? Then as we move down under that, we see the adjustable rate mortgages. And believe it or not, ARMs are actually coming back. They're coming back in some areas with a vengeance, which is a good thing, right? And that's for your buyer that's maybe going to only stay in the home for 3 to 5 years, maybe even less than that. We have a lot of people that are, buying a home trying to move up. Also, maybe they're buying a home temporarily where they're going to eventually downsize. So if you know that they're going to stay in a home for shorter than the normal range, which would be 15 years and beyond, then an adjustable rate mortgage might be the best avenue for them. And, again, that's what we need to structure. We need to figure out what their long and short-term goals are with the property that they're buying. And of course, the most standard are the fixed rate mortgages. The benefit to that obviously is your payments remain the same or close to the same, depending on what happens with taxes and insurance. But for the most part, that's going to be a stable and consistent payment throughout the life of the loan. Then on the right-hand side of your screen, we talk about government-insured mortgages. The most common are FHA, and we'll go through this, but I know there's a lot of you veteran real estate agents go, oh man, FHA, no way. Actually, it's changed a lot in the last 10 years or so. FHA is really, really a good benefit for a lot of people in different situations, and we'll talk about that. We also talk about the Veterans Administration loans. Those are those wonderful people who have served our country and that have benefits. We'll talk about those as well. And then, of course, USDA loans, and we'll get a little bit more specific into that coming up and when we get into product specifics. And then our jumbo mortgage buyers, right? Those are the ones that need to go above the standard conventional loan limits. And there's a lot of jumbo offerings out there that we can talk about as well. All right, so the thing about a conventional mortgage, right? There's so many options here, and conventional is there's a lot of the limitations that are on some of the other loan programs that we don't see on a conventional mortgage. This is going to be, as I mentioned earlier, this is going to be your most common type of buyer. Anywhere from, they can put anywhere from 3 to 5% down. Believe it or not, on a conventional mortgage, I had an agent tell me the other day, wait a minute, 3% on a conventional? I thought that was only FHA. Well, no, you can actually do a 3% down on a Freddie loan, Fannie loan, and the minimum credit score is at 620. Now, the other thing about that is that there are some restrictions when we talk about debt to income ratios, right? So you guys all know DTI's front end back end ratio. Just to put that into perspective for you, front end ratio is their housing expenses versus their gross monthly income. Back end ratio is their total expenses versus their gross monthly income. And remember, we work off of gross monthly incomes. But there are some, the old adage was that you could never go above a 43 back end ratio. Well, there's, depending on borrower situations, what we call compensating factors. There are times that we can go well above the 43 back end ratio. So there's a lot of things that you can do with a particular buyer. And again, every buyer is different. We have to figure out what works best for them. Minimum credit score is usually 620. If you get much lower than that, you're probably going to end up, especially with a lower down payment, you're probably going to get, need to think about what you could do as far as a government loan or a different type of loan. Now, another nuance about conventional mortgages is there's some misinformation out there when we talk about gifts, right? You can't use a gift on an investment property, but with some restrictions, a borrower can actually use a gift on a Fannie or Freddie property. Usually it always has to be the primary or second home. And there are some little bit of restriction there. It has to be somebody that they know, somebody they're related to. I'm sorry, that they have to be somebody that they're related to. Spouse, child, dependent, other individual that's related by blood or marriage, adoption. Things like that. You can actually now use a gift from a fiance or a domestic partner, which is really cool. That's changed over the years. So there's a lot of things that have changed and evolved over the years to make it a little bit easier for borrowers. We always want to have the borrower have some skin in the game, some of their own funds used for the down payment, but we can use the gift as well. Now, as I mentioned, they can go as low as 3 to 5%. Remember, on a conventional loan, that if they're below 80% loan to value, in other words, if they put less than 20% down, that they are going to have to pay private mortgage insurance. But the cool thing about that, on a conventional mortgage, when they reach that 80% equity and their loan to value is the less than the 20%, right? They actually will have the PMI removed and they don't have to do anything. And so that's kind of a really nice feature of the conventional product as well. And again, I think the thing that they like about conventional mortgages, if they're on a fixed rate, it's pretty much going to be the same payment throughout the life of the loan. Now, if they're on an ARMed on a conventional, obviously that's going to be determined by what type of ARM that they go under. So that's basically the summary of a conventional loan. So many options there. There are some differences when it comes to using whether you take them Fannie or whether you take them Freddie. But as far as we're concerned, when we talk about a conventional mortgage, you can go on a fixed rate mortgage. You can go up to 97%. So just a 3% down. Freddie, you can only do 95% on a purchase. So you think about how you would structure your buyer. Again, your loan officer is going to be the best person that's going to be able to determine exactly which investor that we would want to go. All right. All right. So here's your government loan programs. There's 3 types of loan programs that we're going to discuss today, and we'll do a deep dive on each one of these individual. FHA, that's pretty common. I'm sure you guys are all aware of that. That's for your credit challenged borrowers, right? They might have something in their credit history that has been keeping them from doing a conventional mortgage. So we have some flexibilities when it comes to credit. You can actually do a fixed or adjustable rate mortgage with an FHA, and they do pay mortgage insurance for the life of the loan. But again, we'll get into that. USDA is a program that we use, which is, by the way, 0 down payment, 100% financing, where we're taking people that are living in dense populated areas, such as metropolitan areas, and buying homes in a rural area. So there's some really cool things about that. And then, as I mentioned earlier, we have the loan products for our those wonderful people who have served our country in the military, the VA loans, right? So let's go step by step when we talk about FHA. So FHA is obviously backed by the Federal Housing Administration. The minimum down is 3.5%, which means we can go to a 96.5% LTV. We go down to a 600 minimum credit score here. Other lenders may go lower than that, but for the most part, we stop at 600. The advantages to this is that the fact that, as I mentioned earlier, maybe you have a buyer that is, had some difficulty in the past. Maybe they've had a collection or two, or maybe they've had some charge off, or, maybe there's just some blemishes on their credit that might prohibit them from qualifying for a conventional loan. The cool thing about FHA is that you can actually qualify with a little bit of a lower credit score. As you see, 620 minimum on a conventional, 600 minimum on an FHA, and you can go with just that 3.5% down payment, right? The cool thing about that is there are a lot of people who might not qualify for conventional that we can take FHA. Now, I want to remind you is that there are some property requirements, right? And you guys all know that, probably a fixer-upper in rough shape would probably not be the good one to try to take them FHA, because there are some things that, structure and otherwise that we have to make sure are in good place. Also, when it comes back to credit, DTI is a little bit looser. As we mentioned earlier with the minimums on DTI, we can actually push that a little bit. The cool thing about an FHA loan, and I know some of you veteran agents remember the way it used to be, 15 years ago, when it was just really hard to get some of the properties to pass inspection or pass appraisal, right? Those days are gone. They have gotten really smart with their requirements. Obviously, it has to be structurally sound. Obviously, it has to be in, something that's not going to put the buyer in peril after they move in. But for the most part, it's common sense approach to making sure that the structure is in good place. So don't let that hold back your talking to a buyer about an FHA loan, because there's so many things that we can do. Now, there is one con to it, and I'm not sure it's a big con, but they're going to pay mortgage insurance for the life of the loan. They're going to pay what's called an upfront insurance premium, and then they're also going to pay MIP, or mortgage insurance premium, on their payments for as long as they have that loan. But here's the cool thing about an FHA is we can get them into that property. They can buy the house, right, with lower money down, lower credit score, and overcome some of the things in their credit profile. And then in maybe, a year or a year and a half, or maybe even 2 years, we can refinance them out of that FHA and get them into a conventional mortgage to where, if they've gotten to the point where they have enough equity in the home, maybe they don't have to pay private mortgage insurance. Or maybe in a couple of years, they're saying, hey, instead of refinancing, maybe I need to buy a new house or a bigger house or in a different neighborhood. And then that's when they come back to you and I, and then we help them facilitate that sale as well. So there are some really cool advantages to doing an FHA loan. All right, VA loans, one of my most favorite things. And I will tell you, every time I talk to somebody on the phone about a loan, I ask them, did you, either you or your spouse or anybody connected to the loan, did you serve in the military? And if they say yes, the first thing I respond with is, thank you for your service, right? Now, thank you, thank you, thank you. And because of your service, you might be eligible to take advantage of your Veterans Administrative VA benefits, right? I love this. And I will also tell you that most of the people who have served in the military do not understand their VA benefits. So let your lending partner, hopefully that's a person with guaranteed rate, let your lending partner really help them understand what they're entitled to. Now, we have to look at their certificate of eligibility. We can see what benefits they're entitled to, and we can facilitate helping them get into the loan. And I'm going to tell you, the VA benefits are much different than what you're probably thinking of, because there's a lot of things that we offer to a veteran as part of their VA loan that are pretty amazing. There's some increased capabilities. We can do VA loans up to $1.2 million. People don't realize that, a VA loan can be in a jumbo marketplace, right? We can do different types of loans. We can help them facilitate what they need to do to buy a home. And most often, depending on their benefits, they don't have to put any money down, right? Now, they do have to pay what's called a VA funding fee, but that's financed into the property, right? There's no MI or private mortgage insurance. And I'm proud to tell you that here at Guaranteed Rate, we have been for the last several years and for the foreseeable future, we waive all of our lender fees for our veterans. We don't charge them any lender fees. They still have to pay that VA funding fee because that's required by the VA, but we don't charge them any lender fees whatsoever, which means they can even buy a little bit more house, right? Or they can, shop and be able to maybe lower their payments a little bit. So I think this is a really amazing thing. Are there some complexities to VA loans? Absolutely. And that's why you need a good lending partner to make sure that they're really good at VA loans and that they can help facilitate getting in them and taking advantage of their the benefits that they're entitled to. All right, USDA, as I mentioned earlier, these are for those homes that are in rural areas, and they're mostly designed for people who are living in metropolitan areas, densely populated areas, and getting them to be able to move out and move into the rural areas. And there's so many cool things about these USDA loans. First and foremost, it's 100% financing, right? They don't have to bring any money to the table at all. There is a minimum credit score of a 620. There is, because it is a government loan program, there is PMI, right? It's actually mortgage insurance. But again, once we get them into the loan a couple years down the road, we can either refinance them or help them facilitate a new purchase. But there's so many things that are cool about the USDA loans. It's designed for people who feel like they're trapped in the city and they can't, pay the big expensive loan amounts that are in a lot of our American cities across the country. It's designed to get them out of the city and be able to get into and purchase a home, whether they might otherwise not be in a position to do that. So I think it's a really, really cool loan program. Not for everybody, but it's kind of a fun program to make available. All right. So one of the questions I always get is, how do I find out if the property is eligible? So here's the cool thing about it. There's a USDA website. You just Google that, go USDA mortgage, and you can see the government site that comes up. Make sure it's a .gov site, right? I think it's, I don't remember the web address. And you can actually enter the property in there. It'll also show you maps. It'll show you income limits. There's a lot of stuff on that website that can help a borrower determine what they might be able to be eligible for and what they might be able to do. But just to give you an example, I live in Chicago, right? I live in the western suburbs of Chicago. Literally 20 miles to my west are areas where you can actually buy a USDA property just outside of the greater Chicago area, which I think is really cool. Illinois is, obviously dominated by the populace of the Chicagoland area. You get outside of Chicago, 20 to 30 miles, and there's tons of USDA eligible properties. So it's a really cool loan program. Again, specific to you, wherever you live, you would have to research where a property might be eligible for that USDA loan. Okay, so that's government. Now let's get into our jumbo, right? Those are the ones that are above what are usually considered the conventional loan limits. And by the way, we just got increased loan limits for 2021. Came out in, I think, late December or early January. In most of the United States, the conforming loan limit for a single unit property is 548, right? So anything above that would be considered a jumbo mortgage. Now in the high cost areas, like Hawaii, District of Columbia, all of those places, it's actually 822. So you'd have to get above an 822 mortgage amount to be in the jumbo space. So that's pretty cool as well. But for most all of you, 548, 250 is the conforming loan limit. So if you get above that, you would have to be in the jumbo market space. So that's what jumbo is all about, right? But there's a lot of advantages for that jumbo buyer. you can actually come to the table and you can go up to 650, which is obviously well above that conventional loan limit, and only put 5% down. You can actually go to 1.25 million and do a 10% down. So there's a lot of really amazing approaches to the jumbo space. But I will also tell you that there's some complexities to it. When you get into the higher loan amounts, you'll also see your much more savvy buyers when it comes to finances. You see a lot of self-employed in that as well, right? So these are people that are trying to improve their financial position. These are people that are, looking at maybe they have a very diverse portfolio. We have access to what's called an asset depletion program. That's for that person that owns a company or whatever, and maybe they don't show a lot of income on their tax returns. We can look at their assets and be able to see what they could deplete and use that as income. So there's a lot of complexities to a jumbo loan. But if you're outside of that loan amount, right? If you're looking at a property that's above 548 in the most of the contiguous states, or if you're in Alaska, Guam, Hawaii, U.S. Virgin Islands, 822 and above, right? If you're in that market space, we need to, make sure that you get paired with a lender that's really, really good at jumbo. We're the #1 non-bank jumbo lender in America, so it's really kind of a cool thing, right? I saw a question pop in: are jumbo loans available for non-owner occupied investment properties? Yes. There are some investment properties that are available in the jumbo market space, again, specific to a particular buyer, and we would have to look on that as a case-by-case basis, okay? All right, next thing that we move into now, new construction. And you guys are all going, I don't really deal with a lot of new construction. Well, you should, right? Because I'm telling you, I talk with builders every day who are looking for really good agents to sell their properties. Now, I'm not talking about those giant mega builders. I'm talking about those builders that are out there really, building a few hundred homes a year, and they're, trying to get somebody to sell them. So we try to partner with them. We try to really make it easy for you to be able to get involved and help those builders sell their houses. So one of the cool things that we do is that we have, in all of those loan products that I just told you about, we have extended lock options, right? We have the extended locks to be able to facilitate the end loan while the home is being built, right? So there's a lot of really cool things. We do have an escrow holdback waiver program. We have a lot of options when it comes to builder. There's not a lot of appetite right now for construction to perm. But there is a product available for that, but not a lot of builders are really looking for that. And that's when you obviously finance the construction of the home and then turn that into an in loan. We have it available. I think most lenders do. Not a lot of appetite for it. I haven't seen one in a while. Most of them are just focusing in on the end loan because the builders have other financing capabilities. So that's what we want to do, is we want to be able to lock in that rate, because we all know rates are changing right now, right? So if you got somebody that's looking for a new construction property, and it might be 6 or 8 months before the property is finished, we can actually lock them in now, right? We can lock them into the lower rate. And if when we get closer, we'll figure out what the rates are at that point in time, and then we'll figure out what our best strategy is when we get close to that. Now, we also have a really cool program, a guaranteed rate. And I don't know if every lender has this. I don't think they do. And again, I'm just kind of partial to guaranteed rate because that's where I work and that's, what we're a part of. We have this program here that I absolutely think is the cat's meow. It's called the Dream Bigger program. So a lot of builders, they won't do a pool, or they'll do the walls up and the walls in, but they don't really get much into landscaping, or, they don't want to put up a fence or things like that. We actually have a program called, as I mentioned, Dream Bigger, where they could actually finance the pool or the landscaping or the fence into the end mortgage. So it's a really cool avenue for new construction buyers. We have a really good approach to helping builders with their strategy. And of course, that would help you when you're trying to deal with that buyer that wants to buy a new construction home. And you know what, with the inventory craziness out there, a lot of homes are going up, and that might be an avenue to help those buyers that are really struggling with the inventory issues that are out there. All right, the next one is renovation. And I think this is probably one of my favorite loans. So you know you have that listing that's a dog, right? It really needs help. Well, we got a loan program that we can help you with that, right? What if you had a home that you have on the market and the kitchen is still avocado green, right? We've all seen them, right? We can actually do a renovation purchase to where the buyer can come in and completely remodel the kitchen as part of the home sale, right? It's called a renovation loan, and they can roll these improvements into the mortgage, and we base the mortgage on what's called as improved value. In other words, we're going to take the improvements that they do in the home, and that'll be part of the appraisal of that particular home. We have a government option, which is called an FHA 203K. We have a Fannie Mae product called Home Style. You can, and there's, I mean, there are some limitations, but say, for instance, the home needs a new roof, right? You could put a new roof on the home and finance that into the price of the home. You can do kitchen. You can even do landscaping, right? You can do curb improvements. There are, as I mentioned, there are some restrictions here, and every case is different, but there's so many cool things that you can do with a renovation loan. And you know, that one home that is just really needs some help, right? If you hear the term fixer upper, right? This is the kind of loan that we can facilitate that buyer. And I saw a question pop in: is that a renovation loan available for refinances? Absolutely, it is. And because most of you guys real estate, you're more concerned about the buy, right, than the refinance. But yeah, there's properties out there that you can actually get a renovation refinance on and do the improvements and as the improved value, right? So yeah, so somebody wanted to do that, and then you know maybe they're going to list their home for sale in 6 months or so, right? So renovation loans are amazing. They fit under the FHA, would be the same credit guidelines as most FHA loans. There's a couple of nuances there, right? Fannie Mae would be pretty much the similar qualifications as a Fannie Mae loan, 620 or higher credit. You do have to have, you know, some down payment. You do have to have some skin in the game. But like I said, with a FHA 203K, you have to have 3.5% down. Fannie Mae Home Style, you can go as low as 3%. You can do a purchase or you can do a refinance. You can't do a cash out because we're obviously going to do renovations on the property. We're going to use the money that's in the equity of the home and the as improved value to do these renovations. So you can't do a cash out, but you can do a standard, you can do a purchase, right? And one of the things I have seen, oh, and the question just popped up in the questions box. Thanks for that, Cody. Yeah, so say for instance, there's some things on the house that maybe, you know, need to be improved before it's sellable. You can use a renovation loan to make it sellable. Obviously you can't turn it around. You have to wait, you know, let the loan season. But you know, it's not something that you would use for a flip. You would have to have it something that the borrower wants to improve the home. They're going to live there for a little while, and then eventually maybe they're going to list it for a file, right? You can do some second homes, no investment properties on a renovation. I think this is one of the coolest products ever. And if you have that dog listing, right, this is something that you can really help the buyer understand. And by the way, we have renovation specialists here at Guaranteed Rate that can really help you with that buyer and help them understand what they could do with the property. Last week, I saw a property that was a 3-bedroom, 2-bath home, and the borrower absolutely had to have a 4-bedroom home. So guess what? They used a renovation loan to add a 4th bedroom. I thought that was really cool. And they did the kitchen too. So that's a pretty cool thing. And again, every buyer is different. Every property is different. We need to look at those buyers individually and figure out how we would help them with a renovation loan. So there's a lot of things that we have to do. And yeah, Alyssa, you're right. It's good for buyers considering an as-is property. All right.
Yeah, I'd like to add a lot of questions coming out on Reno, and we can only spend so much time on each one, but we did a full webinar just on renovation, a full hour. So that is on the Agent Advantage site. If you want to go in and listen to one of our renovation specialists go into this in even more detail, check out that renovation webinar that's recorded on the site.
Thanks, Kurt. It's kind of funny. A couple of years ago, I was out speaking to a group of realtors, and my wife happened to be with me. And I got up on the stage and I was talking about all the things that you could do with a renovation loan. And as we got in the car to leave, my wife looked at me and she goes, "I'm really mad at you. Why didn't you tell me about this? We could have done our kitchen years ago." So I'm going to tell you, there's some really cool things there. All right. Okay. Condos. Condos are really, really growing in popularity, right? And a lot of people are going, "Oh, I don't want to mess with condos. There's such a pain in the you-know-what, and you got to deal with documentation, and you got to get the condo docs, and you got to, do the HOAs and all that stuff." I'm going to tell you, at Guaranteed Rate, we're really good at them. We have a whole group of people. We maintain a database of the condo docs. We can help you facilitate the sale of a condo. There's a lot of interest out there for condos right now, in the fact that a lot of millennials, where do they want to live, right? They want to live in downtown areas. They want to live in condos. They want to live in these type of areas. Plus, the price on the condos are a little bit, more affordable. We can do in pretty much any loan program on a condo. We can, do an FHA. We can do VA for sure. Not many USDA loans on a condo because they're in metropolitan areas, but conventional for sure. A lot of jumbo condos that we do, right? There's so many nuances to a condo. There's walls in, there's non-warrantable, there's warrantable condos. There's a lot of different things. Don't be afraid of condos. If you have a buyer that really wants to search a condo, make sure that your lender partner can really help you and be an expert with that. We're seeing a tremendous amount of interest in the millennial aged buyers wanting to buy condos. We're also seeing, on the totally opposite scale of that, we're seeing a lot of people who are ready to downsize, that are wanting to sell their single family home with that yard and all that maintenance. They're wanting to sell that home and move into a condo where they don't have as much maintenance or responsibility. So there's a tremendous amount of interest out there in condos, and there are some nuances to them, but mostly it's the making sure that we have the condo docs and all of the things that we need to do to execute on the mortgage. At Guaranteed Rate, we pride ourselves on being condo experts, and so if you need additional questions on that or things that you want to deal with there, again, your lending partner is going to be the best answer. But I just want to stress the fact that pretty much every loan program is available on a condo. So whatever the buyer would be, whatever their particular situation is, let us figure out how to get that buyer in that condo in the best way. All right. Here's one that's really kind of special to my heart. My youngest daughter is a doctor, right? Just coming out of medical school. So we wanted to mention that we have some specialty loan programs. We have different kinds of loan programs, and we have so many of them. I didn't want to spend a lot of time telling you about specialty loan programs, but I did want to mention this one, again, near and dear to my heart. So you got this person that just went through, you think about it, 4 years of undergrad and then probably a year gap, right? And then because they had to do their clinicals and work in a hospital, and then they go back to 4 to 5 years of medical school. So they spent the last, let's say, 10 years in school, right? And they have a tremendous amount of debt, right? What we want to do is we want to get those doctors into communities. We want them to feel like they have a sense of purpose and to be able to, one of the things is that they're going to match into a particular area, and then they're going to do their internship and start building their medical career. So what we want to do is we want to help them get a property and get settled and be able to, focus in on building their practice and helping their patients, right? So we have this medical program, the doctor program, that's available for single family. We can do condos, pods, 2 units properties. You can do an ARM. There is some limitation on the adjustable or the fixed, but the cool thing about that is that there's no PMI required, and we can actually do a 90% loan to value. The screen says 89.9%, but it's okay, 89.9%, 90%. LTV up to 1.5 million, okay? Now, 95%, which means they only have to put a 5% down payment on $1 million property. Most of the doctors that I've seen are coming out and they're right at the cusp of either the conventional loan limit or just a little bit into the jumbo marketplace. So what we can do is we have a lot of options. The minimum loan amount we can do is $200,000, but there's some really, really cool things that we can do to help facilitate a buyer who is a doctor moving into a new community, coming just out of medical school, where they're going to spend the next 2 to 3, possibly 4 years as an intern, or building their practice in that particular community. We want to help them buy a house, and that's what the program is all about. All right, I see a bunch of questions. I want to go back, Kurt, and hit a couple of these, because I really want to kind of drive home some things, right?
Sure.
You mentioned the webinar about renovation loans. It's on agents.rate.com, agents.rate.com. Go to the coaching section. By the way, you can also go to agents.grarate.com or agents.properrate.com. Go to the coaching session. You'll see the webinar on renovation. And Kurt did an awesome job extracting information from our renovation specialist. Oh man, there's so many things that you can do with a reno loan. So don't be afraid of them, okay? Some condos will only allow certain lenders to finance the community, right? I'm not sure that's legal, but depends on that particular condo. Again, every situation is case by case. Every condo building is case by case. We just have to take that on its individual standpoint. But I wanted to bring that up, not the fact that I'm trying to say that they're not doing what's right, but I just wanted to drive home the fact that every situation, every condo is absolutely an individual case by case situation. USDA, investor, no money down, right? Not available on an investment property. You can only do it for a purchase. You can only do it for a purchase. It has to be somebody moving out of a densely populated area who wants to buy a primary home in a rural area, okay? I wanted to make sure I clarified that. How easy is it to get an FHA for a condo? 90% of my condos in my area are not FHA approved. That's absolutely correct, Keith. It's something that we have to deal with. But you know what? It may be that maybe a lender didn't go in and try to get it approved, okay? I will tell you that depending on the particular situation, again, I'm going to go to that individuality. It might be that, we can go in and maybe your lending partner can go in there and get it FHA approved, right? Somebody has to drive that approval process. Is the doctor program only for doctors, or would it be for other medical professionals like pharmacists or nurses? It actually has to be an MD, right? So it could be a ophthalmologist, it could be, but it has to be a medical doctor. That's what the program is designed for, right? I wish it applied to nurses, but it doesn't, okay? PUD is a planned unit development. Good answer there, Danielle. You did a good job on that one. Okay. Let me see. I'm wondering if USDA loan could be an option at this time. I'm going to tell you, those properties are out in those rural areas that might qualify for USDA. You just have to take it and see what you can apply there. Sometimes, we've tried to do a USDA loan on a property that's eligible, and we've ended up going conventional, right? We've ended up going conventional or even FHA. So again, it's a case by case property deal. All right, so a lot of questions on that doctor loan, but again, it has to be an MD. A dentist would qualify, right? All right, let me see. I think that's all the questions that I came up with. And so one of the things that I want to drive home is what we started by talking. And Kurt, I think this is really important in this crazy marketplace that we're all living in right now with, multiple offers and low inventory. Get your buyer pre-approved. That's the best thing I can tell you. Get your buyers in front of your lender partners, and let us do the heavy lifting. Let us make sure that we're getting your buyers in position. Let us help you answer their questions about getting in position to buy a home, whether they have questions about how much money they need to have down, what different strategies that we can help you with. As you can see, there's a lot of loan programs here and a lot of different nuances to every loan program. There's so many options that we have to help a buyer with. And so I think what's really important is that, have a conversation with them, figure out what they're trying to do, see what what situation they're in, and see if they've done their homework. And if they haven't, maybe advise them a little bit about, what they should be doing, looking at their finances, look at their credit, look at, what their strategy is, what are their savings. One of the things that we deal with a lot is and this has changed, by the way, over the years. It used to be you had to have 6 months of reserves for most buyers. Right now, most investors are going to 3 months on reserves. And that means they have to have left over when everything is said and done. They have to have 3 months of mortgage payments still in their assets, right? But that's one of the things that I talk to buyers about a lot. And first-time home buyers, oh my gosh, they're so amazing, but they have a lot of questions, right? So let your lending partner help you with those first-time home buyers. And I will tell you that the other thing that you have to focus in on are the different types of gender groups, right? So you think about all of these different age groups and all of the things, all the different living situations out there. We can handle all of them. We can really advise the borrowers the best direction they can go. You think about the generations, the millennials. Oh my gosh, the millennials, they're awesome, but they want technology. They want to do everything on their phone. Well, you got to have a lending partner that can facilitate that, like Guaranteed Rate. Anyway, we want them to start on their phone, but we want them to finish with us, right? And there's so many things that we can do to help different generations and different living situations on all those things out there. But again, I'll drive home the fact that every situation is different. Give them some basic advice to move them in the right direction, and then get them in front of your lending partner and let us do the heavy lifting. Does that work for you?
Question on pre-approval. Depending on where they are in their journey, when should the buyer start the approval process, in your opinion?
I would say right away. I mean, I would hopefully all of the agents, Kurt, are not going to, take somebody or spend some time with somebody trying to talk to them about buying a house and showing them properties until they're pre-approved. The sooner that they get them, underway in the process, turn them over to your lending partner, let us work our magic, and then we'll give them back to you when they're ready. Right? And sometimes it takes them a little time to get in position. Maybe they need to save a little bit more money. Maybe they need to work on their credit a little bit. Maybe they have some homework to do to be in position to buy a house. So, let us do the heavy lifting. The earlier that we can get them pre-approved in the process, the better off you're going to be.
Got it. Great.
Yep.
One on new construction in today's DIY world. And I think I know the answer, but your bullet said third party, but can you take out a construction loan if the owner is doing the build out themselves?
You know what? I'm not sure. That's something I've never heard of. The owner being usually they have to be a builder or a contractor for us to be able to do extended locks on the property. I don't believe, and again, I'd have to research that, Kurt. I don't believe that you can have somebody who's just building a house and use the extended lock program on that particular thing. I think they have to be a licensed builder.
Got it. Very good.
I saw something about, does USDA have to be approved for a loan amount and FHA? I'm not sure what you mean there. Who asked that question? Hang on just one second. Charles, you asked a question once. Wait a minute. That's not the right one. Somebody else. The question went away. Sorry. Okay, there we go. Julie, you said does USDA have to be approved for a loan amount and FHA for SP? I'm not sure what SP stands for, but on Kurt, if you go back to the slide on USDA, slide 13, I think. Yep, there it is. Okay. So here's the thing about a USDA loan, right? It has to be under, because it is a government loan. It does have to be under the government loan limits, right? So you can't go buy a $1 million mansion or a $11 million mansion on a USDA property. There are some nuances as far as the loan amount goes. But remember, this is getting people out of the city and into rural America. That's what it's designed to do. So that's why it's 100% financing. That's why it's zero down. That's why there's some really cool things about the loan. And I would suggest that you go to that USDA website, make sure it's a .gov site, and you can see the areas that qualify for that particular loan. And again, I'm not sure what the second half of your question there was, Julie. Okay. Yeah, you cannot be the builder and use that loan. That's absolutely correct. Okay. All right. So here's a question I get a lot. PMI, right? Private mortgage insurance on a conventional mortgage. So when a borrower reaches more than 20% equity in a property, by law, the lender has to remove private mortgage insurance. Okay. So we have to remove the private mortgage insurance on a conventional mortgage only. So, and that's why it's called private mortgage insurance on conventional, when they reach that 20% or higher equity position. In an FHA loan, the MIP, that's why it's called mortgage insurance premium, is in place for the life of the loan. Okay, so it's very important that we understand the differences. And so don't be afraid of an FHA loan. As I mentioned, a year or so in, we can figure out what would be the best time to be able to either refinance them out of that FHA loan or maybe facilitate a new sale. Okay, I love that you asked that question because I get that a lot. Let me see. Okay, sales price, gotcha. All right, so appraisals are going to be market driven. Appraisals are going to be, we're going to go for the normal procedures on appraisals. Has nothing to do with sales price. It has nothing to do with loan amounts. It has nothing to do with that. We take the appraisal for what the property is worth. And there's still, believe it or not, there's still some appraisal waivers out there. And we just have to figure out if that appraisal waiver is eligible, or the property is eligible for an appraisal waiver when we run it through automated. But the appraisal is the appraisal. The appraiser is responsible for giving us the market value of the home. They're not influenced by the loan amount or the sales price. Okay, I want to make sure that I drive that home, because appraisers are something that is necessary in all of our business, and we have to go with what that we have to do. All right, cool. Perry, that's a great question. Again, that's too specific for me to answer generally, but I think that that's something that you need to contact your lender partner and figure out, what would be the best strategy for that $1 million borrower. Lender doesn't remove the PMI after 80% LTV. Again, that's on a case-by-case basis, Maggie. We need to do a good job of educating our buyers to let them know that, the PMI comes off when they reach that 20% equity position. All right, I think that's all the questions that I could, conventional loan, what's the lowest amount they could potentially put down? 3% is the lowest that they could potentially put down, okay? All right, Kurt, I think I covered all the questions. I know we're getting really close to the top of the hour, is even as fast as I talk, so I'll let you take it.
Sure. Love all the questions, by the way, and this will be recorded. I just saw that in the chat. Every webinar is recorded and archived. Give us a a day or two to render this and put it onto the Agent Advantage site. You can shoot us an email or we can send this to you directly. Their next webinar, I guess it's not the August one, but the end of June, we have Anthony and Anton Downing, who you may recognize them from their TV show, and they are going to come on and share what they do and what you can talk to with your clients on how to grow wealth and improve your community dream plan, execute with real estate transactions to build wealth. So that should be a really entertaining one. Those guys are great. We look forward to having them on live and for you to go in and ask them questions. Again, Dave, can't thank you enough. Tons of, I hope everyone learned something on this call. And Dave, you are a wealth of knowledge and we appreciate you coming on and taking the time to share it. And if anyone on the call has questions or is looking for a recording, you can email us here at the Agent Advantage team directly, agents@rate.com. Anything in closing, Dave? Again, thank you so much for your presentation.
Hey, yeah, I'm just glad you guys, get out there and help, let us help you sell some more houses. There's a lot of cool things here that we do, I'm sure, but what I really want to watch, Kurt, is you corralling the Downing brothers, because they are amazing. So
a lot. Yeah,
if you haven't watched their show, you have to.
Looking forward to that. So stay tuned for details on how you can register for the next webinar.
Yep.
So on behalf of myself, Kirk Klaus, Dave Lopshire, the Agent Advantage team, Danielle and Nick, we'd like to thank you for taking time to join our live webinar. Tune in next month. Take care of yourselves and have a great rest of the day.